The Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live. I'm Alex Matthew. Here are the headlines. Moody's upgrades India's rating to Baa2 from Baa3, says its outlook is stable. Asian markets look set to end the week on a positive note, building on a rally that started on Thursday. CLSA has rejigged its ex-Japan long-only portfolio. Z Entertainment and ACC will exit, making way for Bharti Airtel and Dalmia Bharat. And HDFC Life Insurance is all set to become the third life insurer to get listed on the bourses. Let's turn very quickly to the international markets now, and US stocks rose on Thursday, with the Dow Industrials jumping nearly 0.8%, paced by post-earnings surge by Cisco and Walmart. The S&P 500 too gained 0.8%, with consumer staples and information technology among the best-performing sectors before Thursday's rebound. Major stock indices had fallen in their previous two sessions as concerns about tax reform and a pullback in commodities worried investors. But let's turn to the big story that's come out just a short while back, and Moody's has upgraded India's credit rating from Baa3 to Baa2. Joining us on the phone line is Bloomberg Quint's editor of economy and banking, Ira Dugal. Ira, it's a huge move and it's come in after a long while.
Good morning, Alex. I think it's been years since India has been pitching for a rating upgrade, and most rating agencies have come to Delhi and gone back saying, no, not yet. Well, Moody's is now saying the time is right. We've got an early morning release from Moody's explaining this move. It's a one-notch upgrade. The outlook, as is the case in all upgrades, moves from positive to now stable. But they are saying that they think that all the reforms that have been undertaken will improve India's long-term growth potential. So the reforms that they're alluding to are the GST, the implementation of the goods and services tax. They talk about the decision to try and recapitalize banks and reduce the NPL problem as well as one key reform. They talk about the Aadhaar linkages too as another key reform. Those are some of the reforms that they highlight in their release. They, of course, acknowledge that some of these reforms will lead to short-term growth disruptions, and they acknowledge the fact that we've already seen 2 quarters of weak GDP growth due to the implementation of some of these reforms. But then they go on to add that they do think that over the medium term, this will ensure that India is on a stable and perhaps a higher growth trajectory. They also talk about the fact, now one of the key concerns has been the debt level in India, and most rating agencies have said that India's debt level, debt to GDP levels are higher than peers in this particular rating category. But Moody's in their release says that they do not think that India's government debt is unsustainable. They also say that as the tax base widens and there's a greater pool of domestic resources, the government will be in a strong position to continue funding its deficit from the domestic market, which of course has been one of the key benefits for India as compared to other emerging markets. We're not reliant on global markets to fund our deficit. So a big move coming in from Moody's. You would expect, and I'm sure we'll speak to a lot of market experts. The first thing this does is that it most certainly improves sentiment. The nervousness that has been there around the Indian economy now gets tempered because you have a rating stamp on, sort of India. That is one key benefit. Also, it impacts flows in a very real fashion. Because there are a lot of large pension funds, etc., which benchmark their investments to certain rating categories. Yes. So as India moves from one rating category into another, perhaps there would be greater comfort on fund flows coming in. But as you said, Alex, this is a big story. Yes. It's been long time in coming, yes. And it will certainly do much to cheer up Indian markets, Indian commentators, and most definitely the Indian government.
You know, Ira, all those things very clearly. But the last week, the big discussion that has been taking place in the bond market is the fact that the Indian 10-year benchmark has touched the 7% mark and come back. Similar story there in China, where it's gone above that 4% mark and come back. But this should give or lend a lot of confidence to investors in the bond market particularly. And it might be a little too early in the day to get a few experts there, but then we could see the yields going down just directionally.
We should, Alex. I mean, we should. And you're absolutely right. It's interesting that this is coming against a backdrop where domestically we've all been worried about fiscal pressures and what that does to the government. But of course, remember that rating upgrades are not in reaction to short-term movements in indicators like, say, the fiscal deficit or the current deficit. Rating indicators are far more medium-term and long-term. So I think, what the first read of the Moody's release seems to be suggesting to me is that they expect that the trajectory that India is on has now moved, to potentially a higher growth trajectory. And with that higher growth comes a lot. You get more tax resources and you have an ability to fund your deficit. You can reduce your deficit potentially as well. So I think they are reacting to all of the reforms. So yes, it will most definitely be a comfort to the bond market. We've, had a problem that we don't have much leeway to have foreign investors come into the government bond markets now because our limits are full up. So, that will be a constraint. But irrespective of that, I think, the domestic bond guys are going to take comfort from this for sure. The currency, the currency will certainly take, note of this as well. And of course, the equity markets will probably react too. So this is good news in every way, shape and form. Particularly, at a time when the government was sort of struggling to explain why it has done certain things. The last few weeks, we have seen them trying to explain, why they are having to adjust GST every 2 weeks or so, why such a large tax program wasn't planned well, why it came so soon after demonetization, what happens to the informal sector. So many questions doing the round. Well, now the government just has to do one thing, hold up the Moody's paper and say
Absolutely.
that, one of the biggest rating agencies is giving us a thumbs up and, acknowledging our reforms.
Yes, absolutely. Now, Ira, over the course of the day, you're going to be driving this conversation and you'll be back very shortly. But let's look at some of the, thanks so much, Ira, for joining us. But let's look at some of the other updates that we have for you right now. The Asian markets have opened positive and look set to end the week on a high. As you can see, the Nikkei is up as much as 1.7%. So all positive cues coming in for India. It should be a very, very interesting session to watch for and to give us a sense as to what to expect. Of course, the highlight is going to be that rating upgrade. But Darshan Mehta and Agam Vakil are here to set us up for the day's trade. Darshan, first to you. Clearly, everything's going well today, right?
Hey, it seems so because the SGX 50 was up almost 35 points. It's managed to jump another 25, 30 points. So it's up almost 52 points. And that jump happened when the rating upgrade came in from Moody. So that's a positive cue. Asia is doing well. So all the cues today at least are positive. Let's look at the ADR. Most of the ADRs managed to gain significantly. Infosys and Wipro, both of them were up almost 3% each. So it's extremely strong traction coming into the IT space. Even Vedanta, after losing for so many days, has managed to move into the green. So it was up almost 2.2% higher. Even on the banking front, ICICI Bank managed to move up almost 1.6%. So that's the cue that we're getting. Crude, again, after 3 days of negative news, is trading with a positive bias. The news coming in terms of Saudi Arabia, they're saying that OPEC should extend, that should be OPEC should extend cuts, is what Saudi Arabia is saying. And oil is headed for the first weekly decline since October. So that's the cue that's coming in from crude. As far as base metals are concerned, there was a weak close for base metals on the LME, especially metals like zinc and nickel. So nickel was down almost 3%, lead was down almost 1.3%, copper was down close to 0.5%, aluminium and zinc were down in trade, tin was the only one that was flat. So overall, LME gave a weak cue. COMEX copper is currently trading with a positive bias, but it's not all bad as far as China is concerned. Aluminium, steel, copper trading slightly weak in China currently. As far as rubber is concerned, it's trading flat after losing for 2 straight days. So that's the cue that's coming in. Gold has gained for the second straight session in trade today. As far as fund flows are concerned, FII sell-in almost 500 crores, 450 crores in the cash market. DIs were net buyers to the tune of almost 847 crores in the cash market. Apart from it, if you look at the monthly basis, FIIs it's just been a few days in this month, half a month, and almost 14,000 crores of net buying has come in from the FIIs. DIs have bought in another 3,000 crores. So strong FII buy activity happening in the cash market. Nifty has inched above the 10,200 mark in trade, so that's a positive. Apart from it, all the sectors ended with a positive bias. The VIX fell in almost 6%, given the fact that the Nifty was rather strong. What did extremely well? Nifty, IT and FMCG did extremely well. As far as the Nifty setup was concerned, we were up almost close to 100 points. Infosys, Reliance, SBI, ICICI Bank, all the heavyweights lending. Only a handful of counters which were down in trade. But overall, it's been an extremely strong day. But Agam, what's the FNOQ like?
Well, Darshan, good news all around. We're looking at Nifty moving back about the 10,200 mark. We're also looking at the SGX Nifty indicating a positive start. Along with that, let's take a look at what's happened in the futures. Well, we've seen shorts cover. So there you have it. We've seen about a 4% decline in open interest, and similarly when it comes to the Nifty Bank as well, the index has moved up as much as 0.1%, but because OI has gone down, we've seen short covering here as well. What's happened with the India Volatility Index? Well, no surprises here. A decline of around 5.5%, again back below the mark of 14, currently at 3.5. And given the fact that we've seen the Nifty move up, we've also seen the Nifty put call ratio edge up higher as at around 1.2 as against 1.13. Let's also take a look at what's happened in the changes in open interest when it comes to Nifty options. So in terms of the options, naturally, as one might expect, you would see unwinding in the 10,300 call, which had seen a substantial amount of accumulation over the previous few days. On the other hand, more writing in the 10,200 put. 10,000 strikes are where most activity seems to be over the previous couple of days. And that said, moving in, of course, again, a lot of changes when it comes to the band, but we have India Buzz Realty and Just Dial move out of the band. We will also be keeping an eye on a few counters which have seen substantial amount of longs. So Page Industries, of course, nearly 29% increase in open interest, and among the other counters which has done seen fresh longs coming in. It's now 28% increase towards longs, and with the 5% increase for Volta. So plenty of stocks out there that we will be watching out for as we move into today's day of trade.
Thanks, Agam, for that. And CLSA, let's move forward with that. CLSA believes that the risks of a healthy correction in Indian markets has risen and will give more opportunities to foreign investors to invest in the Indian markets. Darshan Mehta is here with more on that report. Darshan, what does the note say? And what are the changes in their model portfolio? So
they are extremely bullish. They had their conference earlier this week, and they are extremely bullish on India. What they're saying is that, obviously the correction that they're talking about is a global correction. This is Chris Wood. He's saying that there is a high probability of a correction that can happen. But so investors who are long-term investors should actually hedge their positions. Apart from it, this actually gives a reason for investors, if the market does correct, to take positions as far as India and China is concerned. So that is something that they're talking about. As far as India is concerned, he's saying that the missing link in the Indian macro was the recapitalization, and now that has happened. That is extremely positive, and now they believe that there is light at the end of the tunnel as far as the banking industry is concerned. So they are extremely positive. As far as earnings is concerned, Nifty now trades at a much higher multiple, almost 17.7 times at a 12-month forward earning, compared to the historical average of almost 14.8 times. So they are saying that it's no doubt it's no longer cheap, it's expensive, but they're saying that the earnings have not grown yet. So they're saying that the aggregate profits as a percentage of nominal GDP has declined from 7% to almost 3% in FY17. So that's the positive that they are saying. And now, because of this earnings revival that will come in, foreigners will be now more inclined to buy more Indian paper. As far as the model portfolio is concerned, housing finance sector represents almost 12% of Greed and Fears Asia long only portfolio. So they are very bullish on this sector as such. As far as stocks are concerned, two stocks in which 4% weightages have been reduced. One of them is Z Entertainment, and the second is ACC. So they are removing this portfolio investment, and these investments will be given to Bharti Airtel as well as Dalmia Bharat. There's a Chinese company called Mashan Air Marchand Iron and Steel. So the 3% weightage of this company will be reduced and will be given to Indian company Vedanta, and 1% will be reduced from Maruti Suzuki and given to Godrej Properties.
Right. Thanks for that, Darshan. Let's take a quick check on the rupee and the bond market now, and those two markets are bound to react very strongly today post the news on the rating upgrade. Saloni Dhanuka is here with all the details there. Saloni?
So Alex, the rupee yesterday surrendered 2-day gains and it dropped 11 paise to end at 65.32 levels against the dollar. Now the home currency has depreciated close to 1% this month, making it the worst performing currency in the Asian market. With the crude factor already playing a part, two global banks, that is DBS and Credit Suisse, have already cut their rupee estimates this week. Now, on the global front, dollar index is trading lower despite approval of the tax bill from the House of Representatives. Now, the index largely came under pressure after disappointing initial jobs data that came in below estimates. Elsewhere, euro snapped its 2-day losing streak and it is now trading 0.2% higher at 1.1790 levels against the dollar. Coming back home, dollar rupee is trading at 64.90 against the dollar in the non-deliverable forward market, which indicates a stronger opening for Indian rupee in today's trade. Moving on to bond market, the 10-year benchmark yield ended 4 basis points higher at 7.06% yesterday. And lastly, global funds increased their rupee debt holdings by approximately 750 crores according to NSDL data, Alex.
Thanks for that, Saloni. Let's shift focus now to the commodities space, and Jayesh Khilnani joins us with all the updates there. Jayesh?
Morning, Alex. Let me start off with the base metal space. So the LME base metal index is actually on track to post a second weekly loss. The last time I checked, it was trading down about 1.3% for the entire week. Now, leading this fall has been nickel, which has posted the biggest 3-day loss since July 2015. So ell since Monday has lost about 9 to 10%, and the other base metals too, like copper, aluminium, zinc, and lead, fell in overnight trade. We're seeing similar cues come in for these base metals from the Shanghai Futures Exchange, where steel is trading down 1%, and the other base metals are trading down 2/10 to 0.5% each. Moving on to the precious metal space, we have seen some bit of rebound come about for the gold prices, which have regained, on the back of a dollar, on the dollar slipping. Now, platinum, palladium, and silver, also have gained on the COMEX exchange. So overall, looking good for the entire precious metal space. The oil prices have actually slipped to nearly $55 for a barrel as US stocks actually gain overnight. Now, Brent is on track to post the first weekly loss and snap the 5-week gain that it had shown. ABN AMRO has come out with a note in which they say that WTI will be reaching about $70 for a barrel by the end of 2018.
Right. Thanks for that, Jayesh. Let's move on. Norway's $1 trillion sovereign wealth fund has proposed an exit from nearly $25 billion in oil and gas stocks. That's in a bid to protect the nation's economy. Bloomberg's Will Kennedy, who filed this report, is here with all those details.
Everyone expects oil demand to peak at some point, perhaps as early as 2025, as late as 2040, and that fundamentally changes the outlook for these stocks. They were in the past growth stocks. They're not going to be that anymore. And I think that very long-term investors like the Norwegian fund are worried about, well, what does that mean? The whole idea of stranded assets. Are there reserves under the ground ever going to get drilled? So I think it's a very, very good investor who obviously has particular concerns about diversification, but it illustrates some of the issues coming to the fore for these companies.
And Matrimony.com has reported a strong set of numbers for the September quarter with almost a 65% jump in its profit figures. Let's head across to Nikki Mirchandani, who's got all the fine print there. Nikki?
Hi Alex, apparently too many people getting married or probably looking for their prospective candidates now. If you look at the performance, revenue has risen as much as 13.6% to 83.6 crore. Net profit has risen by 64% and EBITDA is also up by 39% to a figure of nearly 20.5 crore as compared to 14 odd crore in the corresponding quarter of the previous year. Margins for that matter, they have expanded to 25% as compared to a 20% number that we were looking in the September quarter 2016. Now, high revenues and operational efficiency along with the lower bottom line expenses, that is the finance cost and depreciation, has led to good set of numbers. If you look at the finance cost, that's come down nearly 62% for the company at nearly 1 odd crore, negligible for that matter, as compared to nearly 2 odd crore that we saw in the corresponding quarter. Depreciation has also come down to 13%, by 13% to rupees 2.33 crore as compared to 2.67 crore in the corresponding quarter. The other highlights are overall 8.7 lakh profiles were added during this quarter, 61% added by the prospects, 17% were added by the parents, and nearly 22% were added by the siblings. Around 52,000 success stories so far have been registered in the first half of the financial year. And if you look at the shareholding pattern, that's an interesting mix. Now, promoter holds nearly 51% of the stake, while public holding nearly stands at 49% for that matter. That's that in terms of the stock.
Thanks, Nikki. Yet another insurer will get listed on the bourses today. HDFC Standard Life is all set to make its debut. Saloni Dhanuka is back with how this particular stock will stack up against its peers and how the valuations are likely post-listing.
So HDFC Standard Life will be making its stock market debut today, thereby making it the third life insurance company to list on exchanges after ICICI Prudential and SBI Life. Now, in terms of subscription, the IPO has been subscribed close to 4.9 times, with QIB and HNI portion subscribing over 16.6 times and 2.3 times respectively, while the retail category portion was subscribed close to 94%. Now, in terms of valuations, if the stock lists exactly at the issue price of 290 rupees, it will command a market capitalization of over 58,000 rupees. However, if the stock lists at a discount of 270 rupees, the market cap would be around 54,000 crore rupees. If the stock lists at a premium of 310 rupees, the market cap would be around 62,000 crore rupees. Now, given the market cap scenario, the price to book will vary in the range of 12.3 to 14.1 times. Now, when you compare HDFC Life with its listed peers, it has the lowest MDAT value of 14,000 crore rupees. Now, MDAT value is nothing but a measure of profitability for insurance companies, while the AUM, that is the asset under management for HDFC Life, is around 99,000 crore rupees, which is again the lowest as compared to peers. However, it grew at a faster pace of 23.3% as compared to its listed peers. Now, in terms of valuations, when you compare HDFC Life with ICICI and SBI Life, its price to MDAT value is much higher at 4.1 times, and as compared to the peers, while price to book is around 13.2 times, which again indicates that the issue looks a bit expensive as you compare it with its listed peers, Alex.
Thanks, Saloni. Shraddha Babla joins us now with Stocks in News. Shraddha, what are the stocks that are likely to be at the center of action today?
Well, Ashok Leland, where the company said they're going to be acquiring 4.68% in Hinduja Leland Finance. That would be for a total consideration of 225 crores, which will bring their stake up from 57.22% to 61.9%. You also have PVR, which has said that they're looking to acquire a minority stake in IPIC Gold Class Entertainment, Now, this is for an undisclosed amount. Now, IPIC is a US-based luxury restaurant and theatre company. They have they operate about 16 luxury theatres and 121 screens across 10 states in the United States. So, this move will give PVR exposure in US. Then you also have a couple of foreign investment limits that have been increased as notified by the RBI. So the FPI limit and ICICI Lombard has been increased from 24% to 49%. That in Edelweiss Financial Services has been increased from 40% to 49%. In Petronet LNG from 30% to 40%. So we could see some positive reaction in some of these names today. And we're also tracking Thangamile Jewelry on the back of a bulk deal yesterday. Well, Old Bridge Capital Management, which is which belongs to Kenneth Andrade, it bought 3.6% stake in the company from the promoter yesterday. So we could see some reaction there. So these are some of the stocks to watch out for.
Right. And Somit Sarkar is standing by with the big brokerage calls of the day. Somit?
So on brokerage today, we have a CLSA on ONGC. Now, they have maintained their buy rating on the stock with a target price of 225 rupees. Now, in the last 7 trading sessions, we have seen a 10% correction in the stock prices of ONGC on fears of default by the Venezuelan government. Now, this correction has brought down ONGC's market capitalization by close to $4 billion US, which is an overreaction because CLSA is expecting that the worst case impact of writing off of Venezuelan assets on ONGC could be close to $1.1 billion US, that is just 5.6 rupees per share. Now, as this correction is an overreaction, the CLSA is saying that the fall in share price is a buying opportunity as ONGC is currently pricing in sub $50 per barrel Brent. Now, according to CLSA, there could be a re-rating as the subsidy uncertainties are behind and ONGC has now started to deliver on production growth. Also, ONGC is one of the cheapest stock when compared to the global exploration and production stocks globally.
Thanks, Somit, for that. And government sources have told Bloomberg Quint that former Revenue and Expenditure Secretary N.K. Singh is likely to head the 15th Finance Commission. Nikunj Ori, who filed this report earlier, has all those details.
Former Revenue and Expenditure Secretary Mr. N.K. Singh is likely going to head the 15th Finance Commission, a top government official told Bloomberg Quint. The constitution of the 15th Finance Commission will be notified soon, the official said. The Finance Commission is set up every 5 years to review finance, deficit and debt levels of the states and the centre. The Finance Commission also recommends a devolution formula through which taxes are divided between states and the centre. The recommendations of the 14th Finance Commission are valid from 2015 to 2020 and recommendations of the 15th Finance Commission will come into effect for 5 years starting April 1, 2020.
Now, there's lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there's also a lot of stories that you should consider reading on the website, that's bloombergquint.com. Here are a couple of them. The government's strategic divestment is proceeding as per plan, and it won't rush through stake sale proposals, including that for Air India. That's according to Neeraj Kumar Gupta, who is the Secretary of the Department of Investment and Public Asset Management. You can probably travel from Mumbai to Pune faster than you can get a pizza delivered to your home. Not now, but that's based on a preliminary study to be conducted by Richard Branson-backed Virgin Hyperloop One. Yields positive results about the viability of 2 cities with a hyperspeed transport system. It's a little... right, so moving on, the 7 states submitted a proposal to seek funds under the government's Power for All plan to ensure electricity to unlit households. These are Uttar Pradesh, Bihar, Mizoram, Nagaland, Gujarat, Assam and Chhattisgarh. R.K. Singh, the Minister of State for Power and New and Renewable Energy, said at a press conference in New Delhi on Thursday. Well, that's all we have for you on this edition of Daybreak, but clearly a lot to talk about. Do stay tuned and we'll bring you all of that after this short break.